You work hard, you save your money. But is that actually enough to build real wealth? So many of us feel safe, keeping our cash in the bank. But that fear of a market crash just holds us back from investing. Today, we're going to break down that exact conflict, the battle between short-term comfort and long-term growth. So let's just ask the question directly, and I want you to think about your own savings right now. Is that money actively working for you, or is it, just sitting there? This is the one question that really separates a saver from an investor, and honestly, the answer could change your entire financial future. And this slide really gets to the heart of it, this huge gap between what we think is safe and what the reality is. Over on the left, you've got what our brains crave, tucking money away, avoiding those scary market swings. But on the right, that's the hard truth. Money that isn't growing is actually losing power every single day. That feeling of short-term comfort can quietly turn into a massive long-term loss. And that brings us to the first major hurdle for every single saver out there, a silent, invisible force that's working against you year after year. And that force is inflation. Yeah, it's not dramatic like a market crash. It's much quieter. It's that slow, steady increase in the cost of pretty much everything. Just think about it, right? The cup of coffee that cost you $3 last year. It might be $3.25 this year. The exact same amount of money buys you less stuff. So here's the key takeaway. If your savings aren't growing faster than inflation, you are actually losing purchasing power, even if the number in your bank account doesn't change. So if just saving isn't enough, then what is? To answer that, we can't rely on emotions or guesswork. No, we have to look at the historical data, which, it turns out, tells a very, very clear story about which asset has really rewarded patient investors over the long haul. All right, let's start with the absolute safest option you can find, bonds. These are basically super short-term loans you give to the government. Your money is incredibly secure, which feels great. But, and it's a big but, there's a catch. The returns are just so low that they often don't even keep up with inflation. So, while your money feels safe, its actual value isn't really going anywhere. Okay, next up we have bonds. Think of these as loans to governments or big companies. They're going to give you a little more growth than bills, and they're way less volatile than stocks, which makes them a nice, balanced, middle-of-the-road option. They bring stability and a pretty predictable return, but they still don't offer that high-octane growth you need for serious wealth creation. And finally, we get to stocks. This is where the real growth has always happened. See, when you buy a stock, you're not just lending money out. You are becoming a part owner of a real business. So as that business innovates, as it expands and makes profits, your investment grows right along with it. It's this concept of ownership that makes stocks so incredibly powerful. And wow, this chart just shows you the insane difference. If you had invested just one single dollar over the long run, here's what it would have looked like. Bills, they barely move. Bonds, they do a little better. But then just look at stocks. The growth isn't just higher, it's exponential. The data could not be clearer. Over time, stocks have been the undisputed engine of creating wealth. And this brings us to a total shift in how we think about the word safe. It's not about avoiding all risk, no. True financial safety is about making sure your money grows faster than inflation is eating it away. It's all about preserving and increasing your power to buy things in the future.
Thank you for watching. Please like and subscribe to our channel.
Okay, but what about the biggest fear? I mean, the one that everyone has, that gut-wrenching, stomach-turning up and down of the stock market. It's the #1 reason people just stay on the sidelines. So let's tackle that fear head-on. This quote just nails it. In the short term, yeah, the market is completely all over the place. It reacts to news, to emotions, to literally anything and everything. But over the long term, all that noise starts to fade away, and the real underlying growth of businesses takes over. The trick is learning to separate that short-term volatility from the long-term trend. And here's why time is your absolute greatest ally. This timeline shows that if you invest in stocks for just 1 year, yeah, the chance of losing money is actually pretty high. But as you stretch that out to 5 years, then 10 years or more, look at that. The probability of loss just drops dramatically. Time literally smooths out all those bumps and completely neutralizes that scary market volatility. So really, it all just boils down to your focus. The short-term thinker is on this wild emotional roller coaster, right? Reacting to every single news headline. But the long-term investor, they're focused on something much more stable, the fundamental growth of the businesses they own. They're driven by patience and discipline, not by fear and greed. So, how do you actually adopt that winning mindset? Well, it's not about having a crystal ball. It's about having a simple, powerful, and consistent plan. So here it is. Here's your playbook for success. Number one, invest regularly. This just means putting money into the market at set times, no matter what the crazy headlines are saying. Two, diversify. Spread your investments out across different companies and sectors to lower your risk. Three, and this is the hardest one, stay patient. You have to give compounding the time it needs to work its magic. And finally, number four, learn to just ignore the daily noise and stay focused on your long-term plan. This is so crucial. The goal is not to be some genius stock picker. Real success comes from building a simple system and then having the discipline to just stick with it through the good times and the bad. That system, that's what protects you from your own emotional reactions. And we're going to end on this really powerful thought. We spend so much energy worrying about the risk of losing money in the market, but what about the guaranteed loss of opportunity that comes from just staying on the sidelines? The greatest financial risk you can take isn't volatility, it's failing to put your money to work so it can grow for you over time.